Hey guys, this is the Working Investor. In this video, we're going to talk about why sometimes boring income ETFs could be unsung heroes. And you could see this especially in this year where you had, in the past 1 year, you had up and down markets. And you can have these little low-key monster ETFs that are stable in the NAV and they withstood the test of this crazy market, and you get to keep your dividends and you have stability in your price. That means you can exit the price, the underlying, without any issue. So let's look at we're looking at the 1 year, year over year. So that includes the up market in 2024 and then the down market in the end of 2024 and then more so in March of 2025. So you could see I'm looking at total return. The S&P 500 we'll use it as a baseline, a benchmark. It's up 5.19%. So congratulations, your total return S&P 500, you're up 5%, even with the crazy market. XDTE, which is a zero day to expiration option ETF by Roundhill. So your total return over the year is a little bit underperforming the S&P 500. They were outperforming, but recently they've underperformed because they didn't do a great job managing, in my opinion, on the up day to get the momentum. So they're 3.58%. SPYI is another famous product. They do monthly cover calls on the S&P 500, and you see they have 5.69% total return, and they actually outperform the S&P 500. They do, so their method seems to have worked pretty well where you beat the market even with this crazy downturn. Now we're looking at the 1 year chart because I want to give it at least a year. YMAX, which is one of my highest holdings, and I'm not too happy with it, the 1 year return is only 0.87% total return, including all the dividends. That means that if you invested everything back in, you didn't even make 1%. And I would say that you probably made nothing because depending on your tax circumstances and depending how much of the dividends is not considered and categorized as ROC, which is return on capital, it would be taxable, most likely short-term capital gains. Anyways, nothing here is financial, tax, or legal advice or any other form of advice. As always, please see all my disclaimers. And then you have CEFS. So this is kind of like low-key amazing. So CEFS, people don't talk about these closed-end funds. So this is a closed-end fund ETF. Closed-end fund, a basket of closed-end funds that have all kinds of stuff inside of it. It has commodities, equities, fixed income, and you could see it delivered 14.29% total return. That's why I'm trying to have a little bit of a holding in this. Even if it's a small 1 or 2% of my portfolio, I definitely want to have some exposure to this because you could see how the performance, it 3 times performed the S&P 500. Of course, there's something called recency bias, but we'll look back at the longer chart in a moment and I'll show you what I'm talking about. And if you look at TLT, which is like kind of like your risk-free rate, treasury products, total return 2%. So take it, S&P, you did better than that. CL, in the 1 year chart, CLOZ is a, CLO. It's an ETF from one of the CLOs. And it's 5.38%. So you could see it's pretty much, kind of, matching the S&P 500. If you want to get shocked, you guys ready for this? Let's go down to price return. And this is going to blow your mind. So price return, SPY is about 5%. XDTE, we said it was close to the SPY in total return, but price return, you're shell shocked. If you used all your dividend, did not reinvest, your portfolio is down 20.67%. And then SPYI down 6.41%. YMAX, this is killing a lot of people, and myself included, down 37.15% in price return. Not total return, but price return. CEFS, remember we saw it was like 14 to 15% total return. But in price return, you're actually up in price. That means if you use 100% of your dividends this past year, you still would have your equity intact and you actually have additional 4.73% in price return alone, it almost matched the S&P 500. And then TLT, I guess the price return would be down, but the total return would be up. And then CLOZ, a negative 3.29. That means you have to reinvest some of it in order to keep your equity intact in place. So that's kind of crazy. We're going to go to the 5-year chart as well to get the most breadth. But the thing is, a lot of these funds haven't been around for 5 years. So we're just going to ignore the ones that haven't been around for 5 years. So we're going to the 5-year chart. I'm just looking at the S&P, and we'll go to total return this time. And you could see that the S&P total return is 83%. So you can see we're just going to focus on S&P, TLT, and CEFS because it's not fair because those are the ones that have been around for 5 years. So 83.5% is our benchmark. So let's look at the last two, CEFS. You could see in total return, CEFS did better than the S&P 500. So that's why I like CFS, because in up markets, it tends to outperform, and in down markets, it tends to not get hit as hard. Historically, again, past performance is not indicative of future gains, but it's good it gives you an idea. And TLT, total return, looks pretty poo-poo, in the past 5 years. Not too great. Anyways, let me know what you guys think. A lot of times you could see low-key funds that are not popping high yield, like super high yield. And I don't want to get any fake dividends. I don't want to get any artificial, flavors. I want to get genuine dividends that you can actually keep and actually use, or even a portion of it. Because I don't consider dividends usable if the price is dropping, because then you have to reinvest all of your dividends. Like you saw in the YMAX product, you have to reinvest everything. And then the only thing you could take is like maybe not even 1%. And some of it you have to pay taxes from all the dividends. So you're really lost. So let me know what you guys think. If you have any low-key funds that seemingly don't pay too much, but actually you get to use the dividends, actually usable, let me know. This is The Working Investor over and out. I hope you guys have a wonderful trading week.